Welcome to the Passive Income MD podcast, where we talk about creating your ideal life through multiple streams of income. If you enjoy hearing about this stuff, make sure to hit subscribe. Now let's get on with the show.
Hey everyone, we're talking about a topic today with Tory Aggeler. I'm excited to talk to him because this is a topic that maybe a lot of people in our community have known about, but maybe you don't have a lot of education on. I know I didn't before I spent some time with Tory. We're going to be talking about precious metals today. Tory Aggeler is a senior precious metals advisor at McAlvany Precious Metals. They're a 53-year-old firm, and he's been with them for 18 years, and he advises on and manages precious metal portfolios, and he's been assisting clients with acquiring, storing, and liquidating their physical precious metals portfolio, and again, really talks about strategy when it comes to these things. I'm excited to talk to you, Tory. How you doing?
Peter, I'm doing great. This is long overdue, and as always, just to appreciate any time that you and I get a chance to chat, and we enjoyed being at the Passive Income MD conference again this year, and I know some of them heard Eric on the stage with the Alternative Assets group, so anyway, glad to be here.
Yeah, I'm excited to talk to you because this is outside of some of the other things that we routinely talk about, especially in the world of like real estate and entrepreneurship. This is obviously an asset class that has been around a while when we're talking about precious metals and the whole concept of gold, silver, other metals. I know that it's been part of kind of wealth building strategies for who knows how long, since people have been around, I guess. But I would say people, especially today, modern investors don't know really how it works, whether it makes sense for them, whether it fits into any sort of diversified portfolio that we have. So we're going to talk about all those things. I'm just curious for you, how did you get into this?
That's a great question, because I was in the world of medicine. I was in sports medicine and had a physical therapy practice in Durango, Colorado. I was out at Northwestern University working with sports medicine there. And so talk about wearing a completely different hat. I ended up selling the practice that we had here in Durango and had a 3-year non-compete, and decided, well, one of my patients that I was rehabbing cervically from an automobile accident was an advisor at McAlvany Precious Metals. And he said, why don't you come give this a shot? And that was 18 years ago. And I never looked back. I never really knew if I would enjoy it or even stay. But man, I've just jumped in with both feet and loved every minute of it. Every day is new. The markets are constantly changing. And so, there's never two similar days in my life.
All right. So why don't we jump into this whole idea of this asset class then? I mean, people obviously have heard a lot about gold, and there's a lot of talk about silver today. How do you explain this whole concept of precious metals, like as an asset class to people, like when they're first introduced to it? Just kind of give us the foundational information about it.
Well, I appreciate that. And you had mentioned earlier, a very old asset class, right? I'd say second to real estate, if you count shelter, it's probably the oldest asset class. And, it's been money for 5,000 years. And really what we focus on is the physical metal. We obviously analyze and stay on top of the paper markets, but it's the physical precious metals that diversify people completely out of paper. Much like owning a house instead of a REIT. People like to deal in the hard asset a lot of times. And so from an asset allocation standpoint, we look at the investment portfolio as having, a bunch of different categories, and the precious metals ends up being a small allocation, but a key diversification because of two things. One, it gets you out of paper altogether. Almost everything else we invest in is paper, right? But two, it's got a long track record that allows us to be a little bit more predictable, and it acts like money. So one of the key differences between gold and silver is that gold is money, silver is a commodity. Now, silver has monetary components to it, but I think that's one differentiation where even within the precious metal sphere, we're still looking to diversify, just like somebody would in any other asset class. They're going to diversify within that asset class. We do the same.
Why do people even typically hold metals, all the other kind of financial instruments available to them today and different types of investments? Like what's like the mindset behind having these, especially from long-term investors?
You bet. So at Basel III, they redefine gold as a tier 1 asset. And the tier 1 asset is on par from a safety standpoint as the US dollar. So the US dollar is the best paper in the world. Gold is on parity with that, as long as you remove counterparty risk. So a lot of people have the motivation of owning the physical metal because they don't want third-party involvement, right? So that sometimes means literally storing it in their own safe at home, maybe in a safe deposit box, what have you. So that can be motivation one. Motivation two that we hear a lot of is it literally is off the radar, right? It's not trackable from the standpoint of somebody making that investment. If you own physical gold, it's not in the digital world anywhere where anybody can see that. And that obviously means number three, that it's not hackable, right? So that traceability, the hackability, from a theft standpoint, it would have to be a physical theft. It can't be a digital theft. So it really brings a component of both privacy and security to it, right? And then with the monetary component, it's got a spendability to it also. So if we did have worst case scenario and for some reason the US dollar ends up seeing its demise, it's always been a means of exchange, whereas you're not going to be able to do that with a stock certificate or, likely even a cryptocurrency in some instances, depending on what's going on. So,
besides the fact that it's a currency, are people just kind of holding on to this, hoping the value goes up over time so they can trade it into as well? Is that what most people are thinking?
That's the case with silver, right? So great question, because silver we look upon as a performance asset, right? It's an asset where we're seeking returns, and obviously 2025 is as best as we could ever hope for. Nobody thought going into the year that silver would be up literally 100% in 2025 now. So of course that's seeking performance, much like Bitcoin. I would compare it to that, where Bitcoin people buy because they're speculating on the performance. They're not buying necessarily because it's going to be a means of exchange, right? Gold is different. Gold is a store of value. What gold does is it protects your purchasing power over time. So gold averages about 9.5% per year returns. Okay, 10% now actually over the last 50 years. And that's a great return, right? And what that does is that makes you immune to the inflationary monetary policies that the federal government refuses to stray from. And so instead of sitting in cash, the way I look at gold is it's a cash alternative. And I preach to the real estate. I go around and give different talks and speak to real estate investment groups. And the one thing that I'm saying is look at gold as your cash alternative, because what it'll do is, by offsetting inflation, if it's returning 10 or 15% in that year versus the dollar guaranteed to lose 2 per their stated objective, but more likely 6% in a year in purchasing power, that's a 15 to 20% differential that can make a big difference in your other investments, the rest of the portfolio. So take your cash position, put yourself on the gold standard, save in gold, and then convert it to dollars to spend when you need those dollars for some other investment. Silver, platinum, palladium, performance assets, and we're buying those, when the technical analysis says that it's favorable to do so.
Joining a mastermind group was a pivotal moment in my life. Within the first year, my income tripled, and by year 4, it had increased 20-fold. But the benefits went far beyond financial gains. I found myself surrounded by a network of like-minded individuals, forming connections that would become lifelong friendships. And the collective wisdom and support from this community played a crucial role in my success and personal development. From these amazing experiences, I felt a strong desire to create a similar community for my colleagues and peers, and that's you. That's why I launched Momentum MD Mastermind. People have been asking what this is. Momentum MD, or MMD for short, is designed to offer the same transformational powers in both personal and professional growth that I've experienced. It's not just about increasing your income. It's about creating this amazing environment where you can thrive, learn, and grow alongside other ambitious and supportive like-minded individuals. MMD provides a space where members can share their challenges, celebrate their victories, and push each other and keep each other accountable to reach new heights. It's about building a network of professionals who are committed to helping each other succeed. We focus on actionable strategies, accountability, and fostering an environment of continuous improvement. So whether you're looking to advance in your career, start a new venture, or simply find more balance and fulfillment in your life, MMD is here to support you every step of the way. Now, if this resonates with you in some way and you're interested in learning more, we'd love to hear from you. To learn more about the Momentum MD Mastermind and to pre-apply for a call with us, please visit MomentumMD.com. Let's see how we can help elevate your life to the next level. There are limited spots, so don't wait. Take the first step towards your transformation today. You won't regret it.
Again, you mentioned a little bit against inflation here. So in periods where we're at right now, where again, there's been a high period of inflation, people think it's come down a little bit, at least from a number standpoint. But a lot of people, when they see what's happening when they go to buy groceries or shop at restaurants, they've noticed that inflation doesn't seem to have tamped down. How does it usually perform in times like where in different parts of the cycle where either inflation is high, maybe when there's a recession? How does it happen? Because I think some people think that may be coming. Or like it's also just times where the stock market is strong. Like we'd just love to hear kind of how it performs in these kind of times.
Yeah, another great question, because it really, again, gold is going to act differently than silver in most similar market environments. Okay, right now they're acting in concert with each other along with the stock market, right? So about 74% of the time on average, gold is going to be moving in the opposite direction of the equities markets. That has not been the case the last couple of years. And that's mostly because of the dollar decline, right? So as the dollar weakens, which happens because of money supply, right? So the inflation that you described is a phenomenon of increasing money supply. And this administration is trying desperately to do whatever they can to increase money supply by reducing, the lending rate. So the rate cuts, obviously increasing economic expansion and doing things that are weak dollar policy. And the more money in the system, the more expensive everything gets. Yes, inflation has been slowing, but it hasn't been declining, right? So if you think about a chart of inflation, look at this perpetual left to right climb with no interruption, because it's a cumulative event. The Federal Reserve states that they want a 2% inflation rate. Now, for 4.5 years, that has not been the case. They've been north of 3%. But that constant inflation is protection number one for gold, okay? And that's why the gold price goes up in our lifetime. And it's also why the stock market goes up in our lifetime. And the cost of everything we buy at the store goes up in our lifetime. It's too much money in the system. So if they don't change monetary policy, and they don't change fiscal policy, meaning overspending compared to revenues, the $2 trillion deficit that we're running now, well, then that remains good for gold. But a longer answer to your question, Dr. Kim, is that the metals are a finite universe of product for the most part. It's very hard to get them out of the ground, harder every year, right? And dollars can be printed very, very easily. There are about 14 different key fundamentals that drive the gold price. So it's not just inflation. It's also equity markets. It is fear in the market. It's uncertainty. It's political instability. It's geopolitical tensions. It's the bond market, fiscal policy, monetary policy. All these different things I have to have my thumb on the pulse of in order to determine the direction. And sometimes 6 factors are bearish for gold and 8 are bullish, and it's just enough to keep gold climbing. So that's a really hard question to answer because the equities markets are far more economically sensitive.
Got it. When you talk to most people that have been invested in this a while, just so that I can understand a little bit, like people are I'm assuming trying to build this diversified portfolio. What role do they play there in terms of how much of their portfolio would you say that investors that work with you typically keep in metals? I say in that area. I think we've talked, there's stuff that's like conventional or traditional or standard in terms of stocks versus bonds. And of course, we talk a lot about in our world about real estate. But like, what about metals? Like how much do people keep in their portfolio versus some of these other things?
Yeah. Typically it tends to be something that most portfolio managers don't recommend at all. And some of that is a bias because it's not a managed asset, right? They're not going to get paid for that asset under management. It doesn't change their AUM fee at all. They don't want to see you leave the paper sector, right? But lately, we, from a hedge standpoint, mathematically, if you're looking at gold as a hedge, it has to be 10% of a portfolio in order to, if that's your entirety of your hedge on the rest of your, let's say, long positions. Okay. So some portfolio managers will say 2 to 5%. All right. That's not an adequate hedge, but at least it's an exposure. And then recently now, I don't know if you saw Morgan Stanley came out and they have changed their typical 60-40 recommendation of 60% stocks, 40% bonds into a 60-20-20, where 20% is now gold, okay, and 20% bonds. And they're not alone. Bank of America did the same thing. Michael Avery of Robobank, Jeffrey Gundlach, from a bond standpoint, all of these typically gold bears have come out and they're looking at the math. And we've been screaming about this for decades, saying, look, the portfolio performs best with gold exposure, and it increases the portfolio by 25% in terms of its performance versus a typical 60-40. Now, I know you and your followers and members don't follow that typical everything in a 60-40 position. So alternative assets can also help bring some balance. The other answer to that question is based on age and stage, right? So if somebody comes to me, they're retired, they're 75 years old, they're on a fixed budget, they're worried about their savings. Well, we might put as much as 30% of their portfolio in the steady Eddie gold investment, right? They don't need to be speculating in silver. If somebody comes to me and they're 30, they've got a good income in the mix, that's going to be shrunk down to about 10%. And of that 10%, there's going to be white metals exposure for performance, because even when gold is down in a year, it may be that silver's up. And so we compound ounces by ratio trading between metals, and we keep a perpetual growth component to the physical metals. So now that average 10% a year becomes an average north of 20% a year over time on your physical precious metals investment.
I mean, I think that especially in the real estate space, we talked about there's so many different ways to invest in it. And I think when it comes to precious metals, sometimes it can get a little confusing. You mentioned that people sometimes keep it obviously at home in physical form. You guys work in the physical world. Some other people probably keep, it in, they invest in precious metals, I guess, through the market, through ETFs or things like that. What are the main ways otherwise? So you can explain, I mean, you've heard of things called bullions, right? Versus coins versus all of these things, or different IRAs that people like. So how are people investing in these things? And I'm just curious so people understand what the market looks like.
All of the above, right? So regardless of the money that you're accessing, with which to invest in the physical precious metals, we have a solution. So that's part of a huge network. It's part of over 50 years in the business. And so if it's non-qualified monies, there are strategies for that. And that can be individually, jointly, in a trust, in a business entity, right? And all of that can be for possession, or it can be for storage. So if somebody does not want it at home, some people don't sleep well knowing that it's in the house, and some people don't sleep well knowing that it's not in the house, right? So we have solutions to both of those. So we open up, we are not a depository. That's where Ponzi schemes come from. You always want there to be a separation of roles and powers. And so we are just the brokerage firm that can help you acquire or liquidate your metals. But we have trusted depositories where we store metals on behalf of those accounts, okay? And there's no minimum to ever do that. But secondly, IRAs work very well. Those metals do have to be stored, okay? They're not going to be taken possession of. And so we use some of the same vault storage facilities in the country based on client preference. And that's just typically opening up an IRA and acquiring physical precious metals within that IRA. And then we manage it and advise on when it's indicated to make a move. Finally, we have foreign storage. So if people want assets in Canada, in Switzerland, in Hong Kong, Singapore, we can do foreign storage as well, so that some assets are out of the country. And all of that, the basis of which is the possession metals, literally taking delivery of that. Okay. And so we handle all across the board, if that answers your question.
Oh, no, it does. I mean, I think that's one of the biggest points of confusion. Again, it's like, sure, I'd love to invest in metals, but I mean, do I have to store it at home? What do I do? And so I think you've done a great job answering that. What are some of the other bigger risks of metals that people maybe they don't know about? I mean, obviously there's the risk of it just getting stolen, right?
Yep.
Physical there. But what are some of the other biggest risks that maybe newer investors don't know about that they should at least consider?
We're an unregulated industry, unfortunately, and there are a lot of pitfalls in this industry. Scams abound. There are bad actors, and we treat ourselves as a fiduciary, all right, self-imposed, because we also have a wealth management arm of the company that is SEC regulated. And so, unfortunately, Peter, the biggest risk in our industry right now is high premiums. The premium is the percentage over the spot price that something costs to buy. Every product, going back to your bullion versus coin question, bullion is just something that's closely tied to the spot price. It can be in bar form most commonly, or it can be in coin form for newly minted coins, all right? Nothing with any age or scarcity or collectability. And then there's the coin world, and the coin world can be, again, bullion coins, but can also be numismatic or collectible coins. And we deal extensively in numismatics and semi-numismatic coins as well. We're not trying to start coin collections. We can certainly help people with those, but that's really what you're trying to do is actually speculate on the premium. And that's part of our growth strategy is we sell products when the premium is high and we buy them when the premium is low, and our ounces accumulate and we get a compounding growth effect. But there are a lot of firms out there that have popped up in the last 10 years, and they're telling people that coins are numismatic or have a high collectability, even though they're hot off the press. There's no track record to them. And I'm watching these accounts and IRAs, especially, they go after the IRA holder because it's where bigger money is. And their IRA literally drops between 30 and 80% overnight, because that's the premiums that these firms are charging these clients. And it's elder abuse. And I'm often, our company's cleaning a lot of these things up for some of the clients after the fact. And so really be careful about knowing key terminology. And if clients want to call and talk to me, I'll arm them with terminology so they know what questions to ask.
I mean, you just mentioned something about a little bit about your strategy. Again, I think the concept that most people think about when they think about, or at least strategy when it comes to these precious metals, is just you just buy and you hold on to it for life, or however long it is until you have to liquidate it. I mean, it sounds like you guys are watching things a little bit more closely, and you're able to trade, and which might, I guess, juice some returns for investors. Can you explain a little bit how that works?
You bet. And that strategy does work best. When you're compounding ounces, it technically means like a ratio trade. A ratio means that one metal has outperformed the other. So if we look at gold to silver, silver this year is up 100%, gold is up 60%, right? So right now I'm in the middle of some ratio trades with my client accounts that bought silver in the spring when the ratio was 100-1. And so we're selling some of the silver and buying some gold. Well, that's a sell. And that's going to generate, obviously, a taxable event when there's a liquidation. So it works really well in IRAs because none of that pertains, right? It's not a taxable event, whether it's a Roth or a SEP or a simple or a traditional. We can do all those IRA structures. So that's one avenue. Outside of the IRA, sometimes that sell is actually occurring when the client is at a paper loss. Nominally, they're at a loss, and so we get a tax loss to carry, but an ounce gain, right? And so a lot of people look at the physical metals as, like you said, sitting there, like almost like they're just collecting dust in a shoebox in the closet, right? So that's not the way we approach it. There are a lot of people that do, and we always do believe that the physical metals are a cornerstone of every investment portfolio, that you should never not hold them. You may increase or decrease the percentage or the number of ounces, or you may have a liquidity event, in which instance our assets, we've had a lot of investors that have turned to us and had to liquidate metals because of other illiquidity events that they've had in other investments. So it's very liquid, but at the same time, it's very dynamic, and we do want to see it growing and just think of it as stacking chips at the poker table. The whole objective is to get more chips, and that's what we're trying to accomplish over a period of time. You need a 5 to 10 year period of time. So everybody should have that long-term outlook with
What does that
physical metals.
do? Like if there's like a number in terms of return for that, like how does that impact the number in terms of your returns in holding these metals?
Well, it literally more than doubles it, right? So
Yeah.
so if your average is 10% a year just sitting in gold, if we can get over the course of 10 years 3 ratio trades, these are slow turning ships. This isn't high frequency trading. If we can get 3 ratio trades in 10 years, you're going to go north of 20. The real math is about 24% annual returns on your physical metals. That's per year, 24%. A lot of that depends too in an IRA. Again, you're getting even more compounding growth because you're not having to settle any taxable event.
A lot of this has to do with diversification, but it gives you an asset class that you can play a little bit of trading, which you've done in a smart, again, over 10 years, sounds like if you're doing 3 trades, it's not a lot of trades, but allows you to actually take advantage of where the market is and where it shifts to kind of juice your returns. And if you were able to do it in an IRA, you're able to do it in a really tax efficient way. And I think that's some of the key points that I've taken from this, which is really interesting. When you look at the future where things are over the next 5, 10 years, and again, you're a company that's been in existence over 50 years. So I'm sure you've seen a lot of cycles. Where do you see any sort of change in the strategy or what's happening with, does it matter what's happening in the market over the 5, 10 years, or do you kind of just consistently keep your strategy and that's where you're expecting to go over the next 5, 10 years?
Yeah, a lot of the objections from stockbrokers and what have you is that, gold will sit there and not do anything for 5 to 10 years. It just kind of moves flat, and they like to point to the 90s for that. What they don't understand is that during that whole time, we're moving gold to silver, platinum to palladium, platinum to gold, right? Or we're playing the premiums. So we look at it as a growth asset. So yes, you always hold the metals and we always get them growing perpetually. That's the whole objective. It's no different than a real estate investor buying in a depressed area, flipping that property. That area has a revival. They do really well and they sell those doors and move into the next depressed area. And now they have twice as many doors as they started with because of the first property's performance. That's all we're doing with the metals. I look at the metals as a performance asset. I'll put our performance the last 10 years up to any other sponsor. And I know that's kind of a bold statement, but gold just gets so minimized in its thought process. And so I look at it as a key long-term asset, but we will have cycles, Peter. Silver's run is not over with, but at some point what goes up does come down. Same thing with gold. And a lot of it has to do with trying to predict, again, monetary and fiscal policy in Washington. And so we have our pulse on that, and that to me is kind of the key, is just constantly looking and researching and subscribing and information gathering. And yes, we will cycle in the spot price, but that doesn't mean that our clients necessarily are having a negative impact on their portfolio as a result of that. A lot of times, like right now, premiums are very low because the spot price is very high. Premiums can actually climb when the spot price drops. So you get a hedge on your hedge, and there's a lot more protections and performance and strategy to it than I think people realize. So I'm very bullish for the long term. Look back 50 years and then look forward 50 years, and the trajectory of the gold chart is probably going to play out identically.
Well, this has been a really interesting conversation. I guess this is just the start, I'd say, of conversations around this. I feel like we can kind of even go deeper on a lot of these strategies and to understand this better, but hopefully this was a good introduction for people. Tory and I have known each other for a little while now, and I've spent a good amount of time talking to McAlvany about educating myself, and I actually invested as well personally to diversify my own portfolio. And I told people during this year, if anything I've learned, diversification is really what will mitigate your risk, but also give you exposure to the upside as well. And so I'm a big fan of that. I know this is one area that I've really started to explore, which is why you're here, right? To talk to our community about this. If people are, if something here that kind of piques their interest, they want to connect with you and with McAlvany in some way, what's the best place for people to do that?
You bet. The best phone number is 866-211-8972. and any member of my team here can assist that way. You can email me, which is Tory@McAlvany.com. That's TORY at MCALVANY. And then finally, silvergoldinsights.com will take you directly to a landing page that we've got set up, silvergoldinsights.com. And you can fill out a contact sheet there as well. But would be honored to speak with or email chat with anybody. And I know it takes a lot of questions and a lot of answers, and we'll be patient in providing it.
Awesome. Well, I appreciate your time on this. Again, I think it's fascinating. I know people want to learn more, and I know this won't be the last conversation we have. So thanks for taking the time, and let's talk again soon.
Thanks again for having me on. Thanks for being a client, and onward and upward.
Enjoy the show? Let me know by dropping a review in the podcast app you're listening to us in. And if you haven't already, make sure to hit subscribe. Join thousands of physicians who are also on this journey to creating their ideal lives through multiple streams of income. Learn more at our website, passiveincomemd.com. Thanks again for allowing me to be a part of your journey. See you next time.